Good morning, everybody. Hopefully doing well. Should be able to hear me okay. Everybody. Perfect, sounds good. Mic check, mic check. Let me know if you guys are watching this in the room. Okay. Got sciatica at the moment and my leg is killing. So I've got Tiger Balm. And my eyes are, it's almost like I got onions in the room. So if I sound like I'm in pain, that's why. Drains my energy. Okay, looking here on the NQ and going to start on the daily time frame and work our way down. So for those who were in the room on, yeah, it's powerful stuff. For those of you who were in the room on Friday, could have been Thursday, could have been Friday. I think it was Friday. We did the masterclass call, which was really, really good. So I'm not going to go through, I mean, I've already analyzed this daily chart extensively, which I know you guys are all aware of. So I won't do that. I will just show you where we are and kind of what I'm looking for. But in short, I should move the chat over to this side, shouldn't I? In short, I am, that makes sense, and I can see you guys. In short, well, there's two levels that I'm paying attention to, but I don't know if they're going to come into play. But if they do, I will look for areas to go long. But the only things that I really are paying attention, or I'm paying attention to, is pretty much this negative 100 from this ATR candle from the Trump tweet on the 9th of April. That is the full completion. So the reason I'm paying attention to that is the fact that the traditional, so the traditional from the ATR low to the high hasn't yet completed that negative 100, which is above us at 22,520s. So that level is still really important to pay attention to, but subsequently underneath that, we do have that negative 100, which is that purple line there, which is the Trump tweet, okay? Since then, 1, 2, 3, 4, 5, 6, 7, 8 days have been spent in that level. And we're getting tighter and tighter. The ranges are getting tighter and tighter. So the only real thing we can do logically is you either go same anchor, new high, and we wait for pullbacks. Okay, back down here. If we don't get those pullbacks, just like we didn't when we completed the 23, we went into a high to high. All we can do is wait for this to either draw or bid into the support, which is going to be this area here. And that's nice because it actually lines up with these equal lows down at this 50. So 20,940 would be really nice. And also 21,286 would also be really nice. However, we haven't yet come into those levels. So what do? Well, there's a couple of things that we can do. We can obviously have those other levels that we would like to see participate, but it doesn't always mean we're going to. And also, this was the same anchor new high that traded the 38 down here, the exact low on Friday, 23rd of May. And of course, that has also gone to its completion of the 23. So the same anchor new high of that level, again, it's the same as what I just discussed. It's pretty much coming down to these lows of Friday, the 30th of May, or the 23rd, which is also a Friday. So there's 2 Fridays that are holding so far, and equal lows of those would be really nice for ads to go long, or at least have a bullish bias. But right now the daily isn't overly bullish for me, and the reason for that is there's a couple of reasons. But if we zoom out from the all-time highs, and I'm referencing this area here because on the ETFs I think this is the all-time high, this was overnight, we are above such, you know, we're way away from, we're so far away from discount the daily, in my opinion, just becomes less advantageous to take longs off it. Obviously, I'm more of a long trader than short trader, so I will try to find longs where I can, but at the same time, I won't be overstaying certain trades. So the 400-point trades or the 100 or the 200-point trades, you know, were down here, right, into this, from this range, taking lows to highs. Now getting into these ranges, you'll see on the daily, the ranges are 200. Right, the average 10 bars, so the average 10 days on the daily time frame is 200. So I'm to make sure that is correct. Give me a second. Yeah, that's the daily. So 201 points. That's crazy. That's crazy. Remember a couple of months back we were getting free 400.5 minute candles. Now this is, the average is for the day is 200 points. So again, as I always say, I need to get this on a t-shirt. If you have your ATR averages in line with your expectations, you can never go wrong. And what I mean by that is, if the ATRs are low, your expectations should be low. Why? There's less range, or there's less meat on the bone, e.g. there's only 200 points on the day that on average is trading at the moment. What does that mean? Well, in an RTH regular trading session day, we're only getting 200 points of action. Now, would you rather trade a day where we're getting 200 points of range or 1,000 points of range? It's the same 24 hours, or in this case, it's the same 7 hours of trading or however long the market's open for, versus way different opportunity. So that's all I'm trying to say. The range is getting significantly less. And yeah, and on Friday, we did actually trade 108. So we traded 80% average, above average. So you can see it was 365 points on Friday. Going back to the daily, so I just wanted to preface that in terms of where I stand with my expectations being low. That's why I wrote a comment in the Discord this morning just saying I'm not going to be trading that aggressively until the daily starts turning bullish. And for me, that would be hopefully a retracement back down into those levels I just said. So markup 21,280s and 21,900s, call it. Until that happens, you know, we have to be sort of cautiously bullish. And where do we find long levels from? Well, I'm going to use the anchor, well, the high to high, which was, the first one was down here. We traded I don't think we traded a full halfway back. So we haven't even traded, it's so difficult for me to trade. We haven't even traded a halfway back from this 61. Now, remember I said on Friday on the masterclass, when we come down to this 61, I like to sometimes use that as an anchor for a halfway back. We haven't even traded that. So we haven't even traded deep discount yet. So there's like this whole range at 21,200s down to 20,090 is like, we're just so far away from discount. So again, I hate to sound like a broken record, but I'm just having to try and find certain levels in here, which makes it less sexy for me to trade, if that makes sense. But there's a level here that we do have, which is somewhat technical. I'm looking just on the daily at the moment. This is a halfway back that traded to the tick on the 30th of May. That completion is above us at 22,446. So I'm going to use that as a target where the market might be trying to gravitate towards. It's about 600 points above. The only problem we really have is we've actually really got about 600 points to the downside and we're still in support. So your R versus R right now in terms of going long right now, like the current price is basically a 1R. And like, that's obviously not ideal. You're not going to risk 600 points, but just in terms of where we currently are, you've got 600 points to a potential target to the upside, but also 600 points to where you're in kind of discount, but you could still come further down, which would be down here, right? So how do we frame a trade off this, right? That's what we're going to be trying to look at today. So I'm going to go down to a half an hour time frame just to see if there's anything else that I can kind of get from this. And the only thing I did see this morning, and I traded 3 micros on the overnight session at 4 a.m. my time, so that's probably like 11 o'clock EST at night, and I just got some of this long down here. Once we ATR'd up, I just tried to buy a discount. I tried to buy a pullback, and all I did is pretty much disregard this wick, and I just took this as halfway back. That halfway back traded this morning, 1, 2, 3, 4 candles on that, and we went all the way negative 100. So you know, that's a trade I'll look at sometimes when we have such a large wick. This was an ATR reversal to the upside. We're looking to buy pullback. We get a halfway back and we go all the way to the negative 100. We hit it once, we hit it twice, we hit it a third time. Now locking in risk in terms of potential shorts at these highs. And we did, I think, ATR reversal down here. So the ATR reversal down, that has been broken. So again, a lot of sort of chop is happening. We ATR reversal down here, then we reverse that whole move. So it's just, again, lower expectations is what I'm going to have going into today. And that so far has traded a same anchor new high. And the ATR up did get rebalanced on that 50. So it was a nice move. I didn't take this move. I wish I kind of did now. I was trying to wait for the open. But this was a nice 100-point move. So longs definitely have been active from the overnight session, so we have to be aware of that. The only thing we also have to be aware from the short side is obviously those shorts that have been smacked in the face on Friday. So if we zoom out, you can see 61% retracement short on the 18th of June got sold into. The same anchor new high, same anchor new low, sorry, from the high got sold into on the 61 as well. The reason I'm drawing from here is because this was the original anchor. So halfway back sold into, same anchor new low sold into. We create an additional halfway back inside this. Again, this is kind of more advanced stuff, but this is the same sort of thing. You can see halfway back sold into a full negative 100. We then go full same anchor new low on the original short. 61 sold into. I mean, look at the reaction. Shorts are definitely in. 2 times ATR, 2 times ATR, 2 times ATR. That's 90 minutes worth of selling 2 times the average bar. That's pretty aggressive. So we can't just cancel out that shorts aren't still in the market. So a same anchor new low is still here, and we have rejected that halfway back at 21,943s. So I'm just like completely stuck because this whole zone here is just, in my opinion, a no man's land. So again, as I said last week, we need to get above this 61. Did we get above and hold? No. So I could not go long, which is another reason why I didn't trade on Friday. I didn't know that was going to happen, but I had a gut feeling that with such a large OPEX expiring, anything could have happened. And you can see we had a nice sell-off. We did come all the way back up, but so far just into a halfway back short again. So I'm going to have the same rules as I had last week, and that is pretty much I'm only going to participate, and it's the same sort of level, 22,000, call it 22,000, right? If you're holding above 22,000, I think that is support, and I think that does take us to these targets to the upside, which is going to be, you know, call it 22,400, 22,450. I think this is a zone that we do get up into at some point, but that is only going to trade, in my opinion, once you get and hold above 22,000. It's a 500-point range, and I think that is going to be much easier trying to trade this side up here as opposed to trying to trade it down here. Yes, you're going to miss some points on the table, you know, 200 or 300, but geez, the headache and the ease of use in terms of waiting for that move and confirmation is going to be way more easier. So this morning, I will just sit on hands until something really clean sets up. Right now, we just have a lot of confusion. ATR reversal up, get sold into the 61. ATR reversal up, get sold into the halfway back short. There's just not really much of cleanness, in my opinion, and I just don't want to get trapped into a position and, you know, get on the wrong side. So I'm trying to show both sides of the market or both sides of the coin here in terms of longs and the shorts, but my daily time frame, I'm not bullish, and therefore I have to have, or have to at least give some weight to these shorts. Whether I take them is another thing, but I have to be aware of that they are definitely in the market. And until we break above that 22,000 area, I'm not too sure that I really want to jump in too aggressively on the long side. Now, I'm okay trading, you know, small size. Like I traded my Top Step accounts this morning, got $200 on the accounts. I actually got mistakenly $200, but I didn't copy trade it. Which was annoying. So I then had to put on a copy trade, and that's when I got on one account $400, but the other accounts just have $200, and I'm simply only doing that just to get my 5 days so I can do a payout tomorrow, right? Most of those trades have taken place when there's actually been actionable signals. But this trade that I took on the overnight, it was okay, but we're way above that price right now. So trying to go long now, I'm 150 points above where I went long this morning. So it just doesn't really make sense to take that. This was an easy discount trade, taking out these lows, ATR up, again, wait for that reversal halfway back, and it was kind of a cheap discount long down here, right? Full negative 100. Now we've gone full completion, and now you're kind of stuck, right? Same anchor new high, traded the 50, stuck at the 50. So I hope you can see this, and I'm not trying to sugarcoat, I'm trying to be honest and real. You can see both levels on my screen. 21,796, 21,943. This is a 140 point range on both sides, the short and the long. So break and holds below 760s, potentially we continue down, selling off. Breaks and holds above 22,000, I think we continue higher. That's 240 points. I believe the better trade is going to be waiting for those levels to break and hold. Whether I trade the short side, I don't know, but that's the level. I would say 760s. If you can't get above that level, I think you continue down. And if you can get above 22,000, I think you continue up. So it's just going to be who's got the patience to wait, sit on hands, SOH, and just wait for those cleaner setups. Now, that's what I see. Obviously, anything can happen on the open, and we may get a rally and break one of those levels, but I don't think it's going to be... I don't know if it's going to be today. If it is today, obviously, I'll be on the mic, but I think it's probably going to be... it could even be tomorrow that we actually trade any of those levels. So whether I take a trade, we'll have to see. But I just wanted to let you know those levels that I'm looking at. And again, ATRs on the day, 201 points, which is the average true range for the day, which is really, really small. Okay, so just use your expectations, or at least lower your expectations in line with the current ATR. And if there's any questions, let me know, and I will be happy to help. But I'm going to load up Zoom now. For anyone that is a masterclass, a top tier member, you'll have access to Zoom, and I will see you all on there in a second.